Good afternoon, traders. John Caruso coming to you here for March 1st with your currency outlook for the day. First, we're going to take a look in the overnight. We did see Chinese PMI figures come out, and they flopped. They missed pretty horrendously in the overnight. We did see an initial drop in equity futures in the overnight. However, the market was saved by a Fed speech in the overnight. We did hear from New York Fed William Dudley. He delivered a speech in China last night, which was fairly dovish. All right, so it was no surprise to see the market come in on stronger footing here this morning, and we're seeing this follow through here as the day goes on. Right now, I got the S&P up about 2%, trading at 1966. Interesting stat here. We have heard from 485 companies have reported earnings out of the 500 on the S&P 500. And right now, the overall outlook is sales growth is down 4.5%. And earnings growth is down 8.4%. So we're not talking about the most bullish scenario for stocks at the moment, but that's why they call this the climbing the wall of worry. We have the stocks once again up 2%, 1966. Taking a look now at the currencies, the dollar is pushing a little bit higher, 98.41 right now. We did see an inline PMI reading here in the United States, and we did see a slightly better than expected ISM figure. Came in at 49.5. However, we're still below that 50 mark, which still signals retraction in the manufacturing sector here in the United States. On the flip side here, you do have the euro down, trading 108.59. We are approaching support very quickly right now. We'll call support down around 108.20. We are going into the ECB meeting on March 10th, where Mario Draghi and the ECB is largely expected to be dovish and continue to devalue and continue to pump QE into the Eurozone. So perhaps we are front running a dovish ECB, which I believe we are, and a lot of that's being priced in at the present moment. It'll be interesting to see how we react after the ECB meeting. That looks like it's already being signaled as a dovish meeting. The Japanese yen right now, 87.75, down 92 points. That market does look like it's trying to top out if you look at a weekly chart. It was interesting to see how the yen performed after the Bank of Japan went negative interest rate policy. We did see about a 3-4 week rally in the Japanese yen, which you would have thought that the inverse would have happened. However, again, I think a lot of that NARP policy was already priced into the market, and perhaps we're going to see that retrace a little bit back to the downside now. So it'll be interesting to see what develops with the ECB going in on March 10th. And then later on this week, of course, we have the U.S. employment situation. The market's looking for 190,000 jobs created in the month of February. And it looks like we're looking for the unemployment rate to hold steady at 4.9%. So anything else, by all means, give me a call anytime. Once again, I'm John Caruso. Thanks for watching. Futures and options on futures may involve substantial risk and may not be suitable for all investors.